Hey everyone, it's Brandy Malcuit with the Blaze About Alaska Group at eXp Realty, and we are on today talking with Ryan Berry. He owns Amped Mortgage, and he's going to be talking about a little bit of what he has to offer and a specific program about zero conventional. Go for it, Ryan.
Yeah, hey, my name is Ryan Berry. Like Brandy said, we're located in Still, Alaska. We do loans all around the state of Alaska. Um, I started this mortgage company about 3 years ago. I'm a mortgage broker, so that pretty much means I do the shopping for you. And pretty much all my business is referral based and doing cool videos like this with people like Brandy and realtors like that, so that I keep my marketing costs down, my overhead down, and I'm able to pass along the savings to customers. So I grew up in the Valley and graduated from high school at Colony in '99. And since then, pretty much other than college, I've had my hands somewhat in real estate between real estate agent for 5 years. Now I've been doing lending for almost 17. So, yeah. And I just reached out to Brandy, told her about a product we have. It's a new product. And she said, hey, let's go live and let's go talk about this. So here we are. All right. So it's a zero down program, and it's a zero down conventional program. It's a little unique. There are some zero down programs out there. VA is a good one of the popular ones, especially up here in Alaska. We also have rural development and USDA up here in Alaska. One of the downfalls with USDA, though, is it's based off of rural areas. So your cities, Fairbanks proper, your Anchorage municipality down in Juneau are ineligible for being able to do USDA rural development. So with the conventional, you can do it. So this would be a product we want to use in Fairbanks, in Anchorage municipality. So that's one of the benefits of this zero down purchase program through conventional financing, is because you get to do it in Anchorage. And the other one too is your USDAs. They have a little bit more tighter, stringent debt to income ratios. So how much debt you have to how much your income is. Usually they want to see you down like the low 40s. 41% max. You can go up to 43 if you have some compensating factors. With conventional, we can go a little bit higher, in the 45, 50% debt to income ratio, just meaning you can qualify for just a little bit more house, especially with interest rates and house prices. We need that little extra wiggle room to be able to qualify. So um, with this program, it's actually not a zero down program. It's actually a 97% loan to value, which means you have 3% required for the down payment. But what that down payment is, it's a grant. So what we do is there's a silent second. You put down zero money, but at closing, you get two mortgages. You got your first mortgage, 97%, your second mortgage, which is 3%. It's silent, which means you don't have to make a payment. It doesn't accrue interest. And then you just have to pay it off when you either pay off the house, refinance the house, or sell the house. It is up to $15,000. So just quick math is you can buy a house up to $500,000, get 3% for your down payment, given to you as a grant in a silent second. It's only for single family homes, condos. It's only for purchases. So no duplexes, triplexes, fourplexes, can't be a second home or an investment property. Again, you can go up to $15,000 for your down payment. Can't cover closing costs. So if you're still needing a little bit of extra help, maybe you can find that from the sellers, and Brandy can help you negotiate that. So there's that. 620 is the minimum credit score. Again, there's 90% LTV, which are loan to value. That's the first loan. Nothing too crazy after that. It's just really a conventional loan. So like I said, it's a silent second, so you don't have to worry about making a payment on it, and it doesn't accrue interest. So gives you just more options if you need a little bit of extra room in qualifying with that higher debt to income ratio limits, and then also too in areas like Fairbanks, Anchorage. And the other thing too is it's a little bit more flexible than rural development too. So rural development sometimes has pretty tight standards. If you don't have a 680 credit score, it's pretty hard to get an approval in the system. So that's pretty much that in a nutshell.
That's pretty awesome. That is actually really awesome, especially knowing, like you were talking about with RD and having the limits with the rural areas and this being able to apply to be used in the city areas. That's a really big deal.
Yeah, it definitely gives more options for sure. Like I said, I'm a mortgage broker, so I do the shopping for you, but we also have more tools in our tool belts a lot of times just because we can access different lenders. So it's definitely a good tool to have in our tool belt. One, not to say downfall, but one of the limitations is it is limited to 80% AMI, so area median income. So you're looking at about low to mid 90,000s, and it's all based off of different areas. You can pull up a map pretty quickly. Area median income. Click on your area that you're looking at in Alaska, and it'll actually give you what the area median income is. But you have to go. You're maxed out at the 80% number. So here in Wasilla, our area median income limit, just in the heart of Wasilla, because again, it changes through Wasilla, but in the heart of Wasilla, we're at $93,760 annually. So as long as you make less than that. If you kind of get in the area where we need more, you have more income, again, RD, as long as, we don't need that extra room in your debt to income ratio, RD actually allows you to go up to $133,950 in annual income as well. So that gives you a couple different loan programs, but also some benefits why you'd want to use one or the other.
Excellent. Well, is there anything else you want to add to this before we say bye to everybody?
It's the end of the year. A lot of things are changing. Income limits change, loan limits change. A lot of things are happening. Market's kind of a little bit of a lot of volatility in the market right now, just with the change in administration. So if you want to buy a home, or if you've talked to somebody here recently and you've been told no, now is a good opportunity to kind of have somebody take a second look at that. If you're a business owner, there's a good time now to sit down and kind of review it before the end of the year. And make sure that you're set up to qualify if you're looking to buy in 2025. Just a great opportunity, great time. Hopefully long-term interest rates are going down. So, there's the saying, buy the house, date the rate. So if you have a house that's the perfect house, hopefully everything's projected, interest rates are going to go down. So the positive is that almost a year ago, interest rates were on average almost 8%. We got down to about 6% beginning of October. We bumped back up to about mid 6.5%. But in the last year and a half, interest rates have gone down almost a percent and a half on a national average. So pretty exciting time. Hopefully, with the new administration and people feeling a little more confident in the market, especially up in Alaska, this whole drill baby drill mantra. Hopefully, that can give a little more confidence. Everybody jumps off the fence.
Yeah. Now, what would you say to the buyers out there who maybe have thought about buying, they just haven't really done much? What would be some of the advice you'd want to give them for this next year? They have any idea that they might be purchasing this next year?
Honestly, there's a lot of things that, you can work on today. So if you haven't had anybody actually sit down and crunch numbers, look at credit, made a game plan. Definitely, if you're thinking about it, sit down with a mortgage originator, hopefully me, and look at the numbers and look at your credit. Last thing you want to do is just move forward, say, hey, I'm going to buy in the spring. I think everything's good. And then all of a sudden we pull credit in the spring and you find out that things aren't good. And we need to work on some speed bumps or some hurdles that we weren't aware of, and might delay that buy-in. So it doesn't cost anything. It's free. We can look at income documentation. A lot of times I'll use credit apps like Credit Karma. Your credit card will give you credit reports as well. You can go online and get an annual free credit report every year. So a lot of times we won't even hit credit. We'll just use some alternative sources just to look what, approximate ballpark, what the credit score is. And then we can look at income, debt to income ratio, credit score, stuff like that, and kind of estimate where we're actually sitting today so that we can make sure we're in the best position possible, that when you're actually ready to pull the trigger, you can pull the trigger on a home.
Nice. Well, thank you for taking this we actually kind of scheduled this a little bit quick and last minute with the new information that he has and what he has to offer. Again, Ryan is able to shop for you. So having a conversation with Ryan and being able to find out what it is in your express best interest with the type of loan programs that are out there, he's able to get down or get in there, get into the details and explain things if you have questions. And if you're kind of just on the go and you want somebody to be able to just make those decisions of saying, hey, these are the 3 best looking programs without you getting as detailed, because we know some of you, depending on your generation, want the extra details. And some of you really just want, give me point A, point B. Ryan's able to do all of it. So I encourage you to reach out to Ryan. His information is going to be in the links as well as it's in our chat right now. And we look forward to being of service to you.
All right. Thank you. I appreciate it. Appreciate the opportunity.
Yes. Thank you, Ryan. Appreciate it.
Thanks.
Bye, everyone.